Even as the US Fed raised its interest rates at its last meeting in December of 2015, you found that although the short term interest rates had gone up, the long term interest rates were still declining. The yields had come down. This shows or projects a rather flattening yield curve. And whenever there's a flattening yield curve, it normally is the harbinger of a recession. So, well, America stands on the brink of a recession, therefore. Its manufacturing index figures shows a decline. Various other factors also are all reflecting a slowdown in economic activity. Now, the jobs market is still strong as the unemployment rate has come down. But as I have mentioned from time to time, lots of people who would have been a part of the labor force have left the market in disarray, so as to say. So they are not being included in the unemployment rate. Otherwise, statistically speaking, you could find that the unemployment rate would be as high as 9%. So here we have a situation where the interest rates in America, just by the little nudge that the Fed gave it in December of 2015, have led to a flattening yield curve. Now, various banks are at loggerheads over monetary policy. You can see that they have taken divergent paths. The various central banks are moving in different directions. The US Fed is on an interest rate hike spree, which I don't think will happen at all this year. People are talking of three rate increases. I think there'll be zero in this year 2016. The People's Bank of China is trying to obviously infuse liquidity. Bank of England is expected to raise interest rates, but I don't think they will either raise rates in 2016. The Reserve Bank of India is expected to, or is believed that they will reduce interest rates in this year, which also I doubt will happen, because there's going to be tremendous run on the rupee as the yuan gets depreciated further. And in order to defend its currency, the Indian government may have to, in fact, hike interest rates rather than reduce interest rates. So now that I have proved that I am quite different from the rest, uh, I think it's a rather grim scenario that we are looking at, and we may from time to time perceive that the markets will regain some sanity. Well, they have regained a little sanity today after the Chinese government decided to do away with the 7% downward circuit filter, so which means the stocks can fall as much as they like, and the trading will not be halted for the day. In fact, as a result, you find that Shanghai Composite Index is up 2% today. But there's nothing to add so much of cheer. The Chinese economy is going through a transformation period. The various central banks, as I told you, are at loggerheads. After so many years of quantitative easing, if the governments find that their economies are now heading towards a recession, it clearly proves that a monetary policy is not effective anymore. Okay? There's a law of diminishing returns, as we call it, and the governments will have to find other ways of propping up the economies, fiscal measures, um, the government policies being changed in different directions, trying to prop up growth. This therefore proves that monetary policy is not going to be the way forward. Today's I was looking at some of the papers, and they were saying that don't forget that there's a US jobs number report out today, and that is also important. Well, the same was the case last December, if you recollect. This is an important report, and it's very important, probably the most important figure for the next 1 year. You can't keep on sensationalizing things. The jobs report is important, but right now there are so many moving parts in the world economy that you cannot depend on a single piece of data to determine what the way forward for world financial markets. The world financial markets are in disarray. There are so many moving parts. You cannot just get up every day in the morning and say that, hey, this is the most important piece of data which is going to run the course of the whole year and dictate the trend for the financial markets, because that's not going to happen. So I believe let's not sensationalize things. There are too many things which are happening, and each of these moving parts need to be analyzed separately. Let's not forget the fact there used to be a time when US and UK world financial markets used to be looking at pieces of data emanating out of Europe, out of UK and United States, and the world markets would move accordingly. Now there is a time when the UK and the US markets are looking to what is happening in China and India, and that is dictating the course of trend in the world financial markets. This shows how the world has changed, how the economic power has moved from the west to the east and will remain there for some time. Now, therefore, I would suggest that look, if you want an answer to how the world financial markets are expected to play out in the year 2015, 2016. I still somehow wish we were in the last year than this year, because it's gone to such a poor start. I mean, in the first 4 days, you have seen the fall that has taken place. It never happened in global history. Anyway, back to I mean, if you were to look, or if you were to find out how the UK and US financial markets are expected to play out in a particular day, look to China and India. These are the countries which are going to dictate the trends, not today, not tomorrow, every day in the future as well, for quite some time, as I can see. Take care. Happy investing. Bye bye.